All right. Microphone check. Check, check. Hello? Hello, hello? Sorry, I'm dealing with some issues on the YouTube side. I changed some settings to try to increase the quality of the stream, and boy, it did not like that. Holy crap! It started crashing all over the place. However, on the YouTube side, I modified the output rate, and I think now I'm not seeing any errors. I'm not seeing any issues, at least. So I think the YouTube side, those issues are fixed. I don't have any performance issues anymore. The stream quality's good. No more drop frames. That was the big problem before. I think we're good now. All right. Cool. Jeez, with that out of the way. Yikes. Welcome to the morning, right? Anyway, mic check, screen check. It looks like everything's working correctly here. Welcome, welcome. Good morning, SSFTG family. Man, it's been a rough one for me. It's been a rough morning. I hope you all have had a chance to rest up. Get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side. Very important to understand everything that's inside there. And also, just a quick note for you all before we jump on the YouTube side of things. The stream will have between a 5 and 30-second delay, depending on where you're logging in from, and that will definitely impact the timeliness of what I may be talking about. I'm seeing... I just saw skip frames a few seconds ago. Okay, so the YouTube side isn't perfect yet. Ugh. Alright. Skipping frames is no fun, but, well. Yeah, I know, right? 1 minute, that's it. What does the quality look like for you on YouTube side? Because I'm getting warnings saying that it's skipping frames still. Like 26% of the frames skipped over the last 20 minutes. Or 2 minutes, rather. I guess it's going to be hard to tell until we're looking at charts, though. I am getting errors, so I'm probably going to have to modify it again. Well, either way, let me know. Hopefully the quality's a little bit better. Maybe 60 FPS isn't necessary. Maybe that's where it's running into problems. I mean, 60 FPS for, what, charts? Oh, whatever. Anyway, before we jump down that rabbit hole, just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options to check out to further your trading education and career. One of the easiest ways is right there on YouTube. You can check out the join button below the stream, and that gets you access to the extended hours room, which we will continue from the morning session with a little bit less delay to the end of the session. YouTube members also have access to the community area on YouTube, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server. Plus, you get the awesome badge next to your name here on YouTube to show your support. Plus, it just looks pretty cool. The best part is we've got a set at $5 a month, so you skip a coffee at Starbucks and you're set. Pretty straightforward there. If you want to take a massive step further in understanding our trading approach and what I'm doing every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything. But listen, this isn't a small little PDF guide that you can finish in an afternoon, all right? Yes, we do have a quick start course, but to really dig into the Academy, you're looking at about 19 plus hours of video course material. Alongside the course, there's homework, there's study guides, and along the way, just to really make sure that you're understanding what's going on. So while you're navigating the course, you're really retaining all of the information, and I review those personally. Plus, you get the day trading, the DTA upgrade discount as well. Sorry, give me 1 second. My daughter's having an issue. All right. Sorry about that. My daughter dropped the tablet on her foot, and that wasn't going over so well. I think she's okay now. Anyway, then let's continue through the morning session here. Man, what a Friday. It feels like a Monday. Then there's the top floor, the executive suite. That's where you're going to find the VIPs. VIPs have permanent access to all that is SSFTG, the Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the Zoom stream, dedicated stream over there, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some of the charts and things going on this morning. Take a look at some news and all that fun stuff, and then we'll see what's all happening. Don't forget to grab your morning DP levels. Those are posted for you in the major 7 markets there. We've got those covered for you, and that's going to be over the NASDAQ, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. Got those all rocking and rolling for you. I'm keeping an eye on my warnings window. I'm not seeing any other new warnings coming up, so I think it's still okay. Anyway, grab the morning DP levels. As far as the news is concerned, we don't really have anything. We just have a huge amount of medium news announcements. Woohoo, right? There's not really a whole lot that's going to do for us. The big thing that we're really kind of keeping an eye on today, given that there are so many news announcements, is more when they're coming out. We've got a big batch of them at 10 o'clock next, although they're medium. With that many of them coming out, it can still have an impact. So we'll keep an eye on that. Beyond that, it starts hitting at the usual Friday news, U.S. Baker Hughes oil rig count stuff. That all happens in the afternoon. Not really too concerned about that. All right. So, starting off on the S&P, we've got ourselves a very strong rally to the upside. Looked like a gargantuan ascending wedge in the end of things. And from there, it hasn't really done anything. We've just basically gone sideways. The market's kind of megaphoned out a little bit, and since then, it hasn't really gone back to the high or the low. So, I mean, is it really still a megaphone? Maybe, maybe not. It's kind of up in the air. Given the way that this is moving around, this is obviously in some form of a corrective phase of some sorts. And if we look backward, it makes a lot of sense. Remember, we had that first leg up, wave 1, into wave 2. Gigantic wave 3. Now remember, wave 2 was relatively kind of gross. We weren't sure. Was it here? Was it there? It was kind of whippy, sloppy, gross. So wave 4 can be fast. That's totally fine. If we start moving up into the 1.38s, like the average objective, and we see a reversal, it does. 0.4, the next one should be at least 0.21. It was nice and quick and decisive. We could qualify that. But the problem is when we extend wave 5 way the heck out here, that starts breaking some rules, right? That's no longer valid at that point. So we have to kind of tone it back a little bit and say, well, wait a minute. Is this really just a larger cycle that was waiting for a more decisive pullback? And that decisive pullback would make a lot of sense to be right here. That was a very quick flush. It hit all of those POCs and everything we were talking about before, and then jumped all the way back up to the upside. That kind of fits the bill. It's nice and decisive. It's quick and easy after wave 2 was really gross and unsure. So given the way that that's forming, now we've got this series of complex pullbacks, which is really nothing more. Nothing more. I'm in Sean Connery mode right now. We've got these moves down, which are just larger ABCDs. We've got this first move down, ABCD. Next move down, or up, ABCD. Next move down, probably going to be an ABCD. We're still in this corrective phasing. We're not really out of it yet. In the grand scheme of things, it's really probably just this. We've got a gigantic zigzag, sideways, diagonal, not really doing a whole lot of anything. We haven't broken down, we haven't broken up, but that's kind of the way that this is looking. If this does begin to break down, then there's a shot at, something much larger. Big breakdown. We start getting back to that wave 1-2 area because that would be kind of breaking this zone. It's a consideration. Now, as far as the sideways consolidation goes, relatively low in the range. And if we look at the POC from left to right, as far as when the market's been in this zone, might take a second here. Come on. There we go. The POC's up here at 4,400 half. Great. As far as the POC zone is concerned, that's not exactly the best spot in the planet. That could be a lot better. But we're under it right now. If I want to be a bull, I can't be a bull. We're underneath 4,400 half. If we modify this a little bit further forward, just looking at who is the more recent POC, where are they at? It's all the way up at 4,412. Once again, I can't be a bull with that in mind, right? The sellers are very obviously in charge. They have the POC off the top and they're winning. So as it stands, even though we are in the corrective phase, we're towards the low of that corrective phase. Unless we start seeing some failures and movement from the bulls, I have to stay on the sell side. Doesn't really matter what I want to do. Now, from the swing perspective, maybe a little bit of a different story, but going over to the gold chart here and looking at the sideways range bound, we finally do have a nice break. This, man, what a freaking train wreck on gold here. Jeez, oh Pete. I'm so glad that we're totally and absolutely nowhere, because the 60-minute chart still shows us that we're in a larger range. I mean, the big thing that we're really looking for here is what do these traders want to do? You know, what is this thing? This is just one big nasty move. It could be one huge ABCD to the upside. Then again, right, if we're looking backward a little bit, we can see that this is already in a relatively strong prevailing uptrend all the way up through the 1900s. A deep, deep pullback to where? The previous zone of consolidation, which was likely also wave 3, wave 4. So the fact that we're showing and demonstrating support here, I know it's tough to say it right now, but this could very easily be the base of a significantly larger move. That's not great for the U.S. markets if that happens, but right now the U.S. markets aren't exactly doing so great anyway. So the upside move is kind of where the market's going to be at. They're going to be looking for more continuation. Whether or not they're able to get it, that's going to remain to be seen. Right now, it's a nice little pullback. If they're starting things off, this is an early potential reversal. We haven't confirmed a new high yet. If we go backward and look at the overall total from left to right, we can see that the POC is back here at 1808.3. If we get a pullback down to that zone, which would be like a negative 2.5 DP, like a huge move down, that would be the major zone of interest where buyers will start sweeping back in. Until then, I mean, I want to be a bull, but it's tough to be a bull way the heck up here. We've got to see some more failures or something. Crude oil just riding the drift train. Jeez, Tokyo drifting its way all the way up to the ceiling. We've got a very strong spike and channel to the upside, but I mean, wow, what a move. Maybe a spike and channel. Some form of a spike and channel going on here. It does kind of sort of fit. It could fit better, but it does kind of sort of fit. It's working its way there. If anything, we're probably looking for a bit more upside objectives anyway, and we've been talking about that for a while with objectives all the way into the 80s. Seeing this continue above that major POC that we've been watching for the past while at 71.91, with the understanding that shorts would have been stuck down here and not really doing anything, not doing anything. Oh, stepping up to the plate. Now we've got double up volume. Now they've doubled up their averages here. And then we step way up over here, right? Well, look at where it was at that time. If we go back a little bit here to that previous high before the dive down, the majority of that volume took place there. Okay, I want to clarify where that volume came in. You can see 3 very decisive ramps in volume. Very typical, right? That's exactly what you would expect from a build-in trader who's getting out, right? They're usually building into 1 to 2 places, 3 if they have to. If they're doing it in the 3rd, they're probably looking for a break even. They're not looking to necessarily make a whole lot, and their break even is going to be about 1/3 of the way up. Well, 1, 2, and then 3 massive size, that would easily drive their average up to around about here, and they may have even taken a slight loss. And now that we see the market rolling back above that POC that they've created, it makes a lot of sense. Every single time that they dove down, we just had a wedge correction, and we're now continuing back to the upside. This could easily start wave 1, wave 2 of a new impulse. Wave 3, maybe already there. Continuation to the upside, maybe that's the final rally to 80. I would still love to see a bigger pullback, but it doesn't have to. Finally seeing some movement on the euro. I mean, it doesn't feel like it's a total waste of time anymore, but man, it still doesn't feel great. The POC's down at the bottom. We know a lot of buyers are still waiting for those 1.18s to 1.183s, that big zone down there. That does line up nicely with the -2, if I zoomed out or zoomed in too quickly. If we go back to the 60-minute chart here, go from the top to the bottom, they finally shifted the POC. Once it loads up, there we go, down to 1.1800, 18100. So that's going to be the major zone of interest if it does pull back. We are seeing some very important things happening, though. If we're looking at this on a confirmed swing structure, we've got the confirmed swing here, and really the only ones we have to work with are there to there, there to there, there to there, there to, I mean, kind of here, but they never made a new low. So we've got to back up a little bit and say, well, wait a minute, what are we seeing? We're starting to break some previous major swings, right? This is what trends need in order to reverse. So buyers will be looking for the pullback. They finally shifted the POC. I mean, we've been waiting for this for like a month now. But realistically, bulls are in, and they're going to be looking for a continuation phase to the upside. A pullback to that 1.18100 would be fantastic. Over on crypto, pretty big dive to the downside, but retesting some of these previous major swings. They're having some difficulty here. Might be an ascending wedge, might be a little bit of a range. If it is an ascending wedge and they're starting to break out through the lows, if it were going to be a false break underneath the lows, that would have been the false break there, but they couldn't make a new high. That's got some problems. So the fact that it's breaking down actually gives some substance for the sellers to drive a little bit further, and further would make sense down to like the 36,500s in that area. That's a very likely zone of support. And then over on Ethereum, we also have a nice little pullback there, but that was after actually making a new high. So we've got a bit of a V-top going on in a little pullback phase. As far as supports going on, we still haven't actually had a new swing low, or at least not a major swing low. If you look at the structures from top to bottom, we've got top to bottom, top to bottom. This thing just went sideways for ages, finally pulling back a little bit. Now top to bottom. We haven't broken a previous swing, so this area down here is going to be a hot spot. 2250s? 2200s? Nice zone. We'll see. And then over on the NASDAQ side of things, if we're looking at the daily chart, this is where things are starting to tilt a little bit. This is where things get a little bit weird. Now, if we look at the last time and every time that we've had a very strong bear bar off of an all-time high, remember, off of an all-time high is the key, because a lot of strong bear bars happen, but they aren't actually at off the highs, like here. It's a really good example. It wasn't actually the top. This bull bar was the high. So we've got to look at where these powerhouse giant bear bars that were coming off of the highs were and what they did. Here we had a strong bear bar that followed through the bear day, bull day, and then ended up being basically the base of support for the next month before a continuation back to the upside. Okay, let's go backward a little bit further. We've got another really powerhouse bear bar that ended up being a zone of support for about a month and then continued back to the upside. Okay, we're starting to see some similarities here. Now, that's something to kind of keep in the back of our mind when we're looking at what's going on. It doesn't have to happen that way, right? Just because it did it historically doesn't mean that that's what's going to happen this time around. But generally speaking, when we have a giant bear bar, off the top, that zone becomes a base of support. Now, it can go down a little bit further, but it usually becomes a base of support for a week to potentially a month before it starts getting a more continuation, and guess where it goes? Back up. So that would kind of line up with what we're looking at here from this larger cycle. If this is going to be a third wave structure, seeing this go a lot further would make sense. But, you know, right now, chances are we're going to be going into sideways range-bound movement for the next couple weeks. The beautiful thing about that, though, the good thing, and why I'm not upset about that, is because that range is wide, right? It's a really wide range, so it allows a lot of opportunities within those swings. So it's still okay, even though it is going to be a giant range. From the 15-minute perspective, actually, I'm just going to use the one that's over here. We have that potential kind of thing that we were concerned about. Like, well, wait a minute. You know, I know they got a bounce here, but they didn't actually get 725. Here's the problem, okay? One of two things is going to happen when this type of situation occurs. We are either going to see another leg to the downside, which hits these areas, and then as quickly as they got there, they reverse straight back out, right? Like no remorse, reversal all the way back out, V-bottom style, like they did over here. That would be scenario one. Now, that would be the scenario that a lot of bulls would like, but here's the rebuttal to that. The POC that they're fighting off of is up at the highs and off of the lows, and so far we haven't hit it yet. So if they're going to support here, they have the argument. That's a valid argument for the bulls to make. But if that fails, where does their support start coming in? The last time that we saw any support of nature was down here on that third pulse, around the 14,500s. So a lot of traders have to ask themselves, what type of trader are they? If they're going to be looking at 725 as their entries with stops way down at the lows, are they going to be swing traders or are they going to be scalpers? Well, for those of you who have been working with me for a while, know the answer to that one. That's pretty straightforward. Now, the way that it's moving, we have to modify and use that as our assumption. So if it does get down here into these 724s, it doesn't have to stop there. The reason scalpers have high probability is because they've traded something for it, right? What do you trade for high probability? Well, you trade risk. You risk more, right? You increase the size of your stop. That's your buffer, right? You're giving the market time to do what you want it to do, but you don't know when it's going to do it. Maybe you're exactly right and it bounces right off your entry. Congrats, go for a bigger target, right? That's awesome. But the reason why scalpers have that high probability is because they have this cushion. So if it starts diving down and we see something like this and it goes back up, that's where the scalpers are not going to want to see it come back again, okay? That's where it's got to really take off if they don't just bounce off of this area. We'll kind of see how the responsiveness is, but right now we have to take the assumption that these are scalpers. Waiting for a better entry might be more beneficial. If we're looking at the 15-minute from a measured leg to the downside, that gigantic impulse usually does show back up again, and hey, lo and behold, where do you want to bet and guess where that stupid thing lands? Unbelievable. That's ridiculous. A 1-to-1 move to the tick, exactly to the POC, 725. Ring the bell. Ding, 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 ding. Got about 3.5 minutes until the stock exchange open, and I think the objective is pretty clear as to what a lot of traders are looking to do. We're looking for a bit more downside action to finish off the job to around the 725s or so. Preferably exactly 725. And then see a reversal out of there. Where did my chart go? Oh, I gotta rename it. Second cell. There we go. Now I'm curious. Now that we've got a few more people checking in and tuning in and all that fun stuff, what does the quality look like? Is the quality any better today? Do you notice any quality differences? Is it skipping or lagging, or just looking for a general feedback as right ahead of the open here before we go into any crazy volatility? I'm trying to tweak the settings as best I can to make it so that all of the price levels and everything are as clean and as clear as possible. But at the same time, it messes with things. So I know this morning the YouTube side of things was a little bit of a mess. Looks the same, pretty good. Okay. Well, crap. Looks the same, but I'm having more issues. That's not worth it. Time to revert back to old settings. 928 hits right ahead of the open here. As far as things are concerned from the start of the morning, I mean, we really haven't gotten a whole lot completed. They started off with an L4. After that L4, typically with an L4, you're going to see an L1. They actually, before breaking a new high, though, created a new higher close. Excuse me, a new higher close inside of there before popping up, which sort of recalibrated things, and now they pulled back again and created an L3. A little bit of wonkiness inside of there with that wedge. But when the next breakout happened, they had the pullback. Now, this one's a tricky one. The first pullback is usually an L1, right? Now, if we look at these pullbacks inside of here, you've got to pay attention to these little internal pullbacks, because these are the ones that'll get you, where they get these snap little dips. They've already kind of satisfied the objective. I didn't measure it exactly perfect with the alarm clock going off, but we've got the L1 triggering already. So if it wants to continue back up, another L1 is a possibility, and you can see there was a very obvious response off of L1. Really, really strong bull bar. But then it kind of crept down into sort of the middle ground, into the bottom, and then pushing into the L2. Now, the L2 doesn't necessarily invalidate the move to the upside, but what it does mean is that the bulls weren't getting what they were expecting to get. They were expecting to have the L1 hold, and it didn't. So the fact that it didn't hold really makes sense as to why this next pullback is so much deeper. They were disappointed back here, even though it doesn't look like it. Looks like a big range still. Stock exchange is open. As far as the S&P is concerned, we do have an outside gap down directly inside this jumbotron wick that happened on that huge bull bar. Holy crap. There's actually a tool for this that I haven't had to use ever. We've got the low and the bottom of that candle is right there. So this zone that it's opening up inside is a monstrous zone of support. That's where the FOMC dipped down to and rejected out of. So swing traders, right out of the gates, immediately at the open, are going to be looking for a continuation to the upside. It's super aggressive because of where we are, kind of hanging on the edge of the cliff here. But realistically, from the bigger picture, swing traders will be looking for those call options, those out of the monies, those really wild out there, low risk, massive reward type trades, because it's possible right now. So just keep that in mind. Right? There's a lot of volatility that we're going to be stepping into. We have another L3, which was demonstrating a bit of confusion. Now we have a continuation break, which isn't exactly very strong. Settlement not too far above. Okay, well, never mind. Bite my tongue. There's the strength. We've got more continuation to the upside, further momentum. This also gives us a confirmed POC from the previous high to high, which I measured incorrectly. Let me get that over there. Got to move quick. Watching this L1 pullback area while we're pressing back down into the settlement zone. Because remember, this is going to be a pretty heavy spot. A lot of traders are going to be looking for an ABCD corrective phase up. That's where we really have to start being concerned with where does the market want to try to reverse. Still a little ways up, though. 940s. Looking for the bulls to dip back into the L1 for a continuation pop back to the upside. Nice continuation back up. I couldn't get a fill on the final objective. Fantastic. Well, we got the majority of them off. I've still got the one holding off of the L1. If it wants to validate itself, that's fine. But if it starts breaking down too much, that was a big old wick. Remember, we're dealing with the open. The volatility is likely going to be pretty aggressive. Hanging on to this trade is already aggressive. I like that little dip fill on the L2 for a pullback continuation phase back to the upside. Absolutely horrendous fill on that attempt of bid there. Got a bit more pullback down into the L2 area. All right, I'm going to jump ship on that last portion there. I mean, man, hitting the bid, hitting the ask, no fill, no fill, no fill, no fill. I'm going to give this a second to kind of work its wiggles out here. And I mean, it ended up in the positive. It ended up being worthwhile, but ugh, man, what a train wreck inside there. It is a deeper pullback, which again is going to dissatisfy a lot of traders. They were anticipating an L3 to reconfirm with an L1. It did not. So the fact that it didn't is a relatively big clue. They might be looking for a deeper dip. What better spot than the previous POC that got left behind? As far as the current developing off of the top, we've got a bottom-weighted POC hanging out at the lows, with bulls attempting to reconfirm more movement to the upside. Whew, man, these candles are still just showing up out of nowhere. Holy crap. The rest of that bull bar and that bear bar just kind of appeared. Like, oh, hi, how you doing? Welcome to the party. Nice bear bar back to the downside. Possibly a washout, but okay, there we go. A little bit more proof of that washout. Buyers use that bull. Jeez, they use that candle. Holy crap. Now, bulls will be trying to buy immediately above that candle, but don't lose sight of where we're at. Right? We've got this huge bear trend to the downside. Buying above candles way up here, not my shtick. That's not what I'm looking for. I wanted to buy the dip down here, and I just didn't get it. When I tried buying into it earlier, it kind of jiggled me out. So buying up here might work, but understand you got to be a scalper with higher risk versus your reward. That's just the way that it works. Got the first 5-minute bar in. POC at 892. On the NASDAQ, and as far as the S&P goes, we do demonstrate support off of that zone with the POC landing at 43.87. Okay, and this time it didn't change. Hey, I can trust it again. Yay! So at the moment, bulls are making their attempt pretty obvious, pretty strong. More bullish continuation. Likely not going to get a pullback at this point. It's just going to finish the move off. Did that make a new high? No, it didn't. Okay. Quick little snap back to retest this 908 area. Could be a final reach for a lot of traders to re-up into a move higher. Much more aggressive this far up, but at least it's in a zone that makes sense. Again, you have to understand what type of trader you are if that's going to be the case. As a scalper, I know that I'm going to have to do some work on my average. Oh, okay, well, there you go, see? Again, I'm taking profit very quickly. I know that I'm a scalper. I can't expect this to go 2-to-1 with that big of a risk. I mean, it might, you know, but am I going to sit through that much? I don't want to. I could, but I don't want to. You know, I don't think anybody wants to. So you just have to be realistic with what you are in the situation. That's why it's reversing so aggressively off of here. Everyone who bought way up there wasn't looking for a massive 2-to-1. If it goes, cool, you know, but everybody took profit on the jump. Now we're reversing back down. This reversal back down makes a lot of sense. Bulls who bought that move and didn't take their profit accordingly, they're stuck. I don't really want to utilize that trap to short this, but if you're aggressive enough, you can see the shorts are working out. This technically is a non-confirmed POC yet. It never made a new high. It's a double top. What a mess. How's the stream quality? I don't have anything in my log saying there's anything wrong. Excellent. More continuation back down. POC potentially shifting on the S&P now 43.91.50. There's only 50 seconds left on the candle to form. On the NASDAQ, we also have the POC shifting to the upside with a major rejection back down ahead of settlement. I mean, these are some pretty heavy clues depending on where these candles close. Where's my bar timer? Hey, hang on a second. I wonder if this works. Can I? No, I can't. Okay. Well, I tried. Yeah. Perfect. I mean, that we got the bar timer on there. That's not perfect for the bulls. This is terrible for the bulls. They need to get some proof fast. Also, just throwing it out there. 1, 2, 3. Very obvious. The only thing that would make it a little bit better with the double top would be for something to be like from the opens to closes, which is not a whole lot difference. I mean, can't really be too picky. The bulls on the S&P ended up closing back up. Wow. All right, so 43.91.50 is the POC. They were able to close back above it with continuation higher. For looking at the NASDAQ, they were not so successful in that regard. As far as that's concerned, we have the current POC at 902.50. And rejecting down. Yikes. We'll have to see. Man, what are they trying to... We've got more bear rejection down. Honestly, it still looks like they're hunting out that 865. My concern, though, is that with that double top, if it pushes down that far, is that going to spark something larger? Where I don't necessarily want to be a buyer at 865. Just out of curiosity, since it was a double top, the new double top POC is at 902.50. Another both at 96.50. Okay. Well, that fixed that one. Since they're both at the same price, I'm just going to use the new one off of the new high. It's not going to change anything anyway. The volume that's coming in here is ridiculous. I mean, look at these spikes. Like, it's not like they're being shy about it. Amazon shares down 7%. Nice. Get dunketh upon. This is the pullback that I've been waiting for on Apple. Unfortunately, Apple's only down 0.7%. Way to follow the crowd, Apple. POC shifting back up, 902.50. Market attempting to continue back up, and that secondary bull bar reconfirming it could be looking for that final leg up. I have some reserves here, but it does look strong. More continuation back up. That does give us at least a more obvious confirmed POC, although it's the exact same price as before. I'm curious. Let's go backward. 900 even. I'm going to use that one. I like that one more. 900 even. That'll be the... Because of it being a double top at higher lows. Wow, this thing's just disgusting. We did start off with a nice little 5-wave to the upside. But man, after that, we got that little nice little false break out of the wedge, continuation back up, and potentially creating a new 5-wave. But the problem is, well, it dipped back inside one, so that doesn't work. So maybe this is in and of itself its own complex continuation, but realistically, we've still got a we're still probably in a correction. A correction of what, we may ask? Well, wonder. Let's look backward a little bit here. What could we be in a correction of? I'm not sure. This gigantic move down, I mean, realistically, even if it doesn't get another new low, sellers are going to be trying. We haven't had a POC shift. We haven't had a really strong attempt from the sellers as of yet. I think that's waiting to happen, and I think that's honestly what's going on up here. They're building their position. Once the POC shifts, it's likely that their position is going to be done. I'm going to be paying attention more from the bear side when we see the POC shift to the upside. More momentum up, still just kind of working its way through. Not really as many opportunities this time around, but, I mean, making the ones that show up work, I guess. Ugh. 9:45, the next news announcements are going to be at 10 o'clock, although they're not very big. Looking at the first 15, we do have very strong continuation going on as far as the S&P is concerned. Very likely a dip back to the 9150s will be heavily defended. And that will be also defended by me. I like that area. It looks very nice. Trap underneath the previous third very strong bull bar to the upside off a settlement. I mean, yeah, okay. That's not going to be enough to attempt to turn this around unless something really, really changes. 10 o'clock news might be that catalyst. Who knows? But at the moment, at least, it looks pretty strong for a dip underneath that previous bull bar for a pop. I just don't want it to go up first through 97.25. If it goes up first, then we've got a bear engulfing, and I'm not interested. That would be a problem. As far as the NASDAQ is concerned, they did re-up their positions to the upside, so likely demonstrating more continuation higher at 96.50, and that's going to be their launching pad for the rest of the day. Upside objectives for them will be based off of that, and that's likely where resistances are going to be. We've already gone through the half to one, so the major objective, if this does complete its move, is going to be up towards 14,957.50s or so. That would be a 2-to-1. If we see the POC shift a little bit earlier, then, you know, maybe it's a bit of a clue. Still looking very strong, though, for bulls. No reason to believe the sellers yet. I really want to. Man, do I want to sell, but I can't. I don't have a reason. Oh, I want to sell so bad. I want to sell so bad. I really want to sell so bad. All right. So one thing when we are in one of these locations, when we're in a zone of very wide open risk where I don't want to take the risk on futures, right? Because the risk of this failing is catastrophic for bears. If this fails to reverse here, we're going up to 15,060 in the bigger picture. Well, I don't want to be holding short from that perspective. So it makes a lot more sense here from an options perspective. We were talking about options long earlier. I know that worked out nicely, but options to the downside now, where sellers will be looking for that continuation lower. We haven't seen the proof on the volume from the POC. We haven't seen any changes in that regard, but being at the top of a wedge in a three-pointed structure to the upside, nice ABCD corrective phase. We know we're still in a corrective phase given the way that things are moving. It makes a lot of sense for swings to be looking for shorts here. From a futures perspective, I think the risk is a bit too high for me. So in options side of things, it makes a lot more sense. Ah, crap, I moved the volume. Hold on. Gotta make sure it's in the right place. I can't be moving that around. Market pushing back up, retesting the inside of that wedge. Finding some resistance back down. Not really a huge surprise, I suppose. Major confirmed swing from before was over here at 865, which is also the larger move, the whole thing. The POC after that was at 1900 or 4900. Jeez, oh Pete, 14,900. We haven't crashed yet, John. Don't force it. And now we're developing a new one. As far as the S&P is concerned, I can't get a pullback. But look at the volume that's coming in. We are seeing a drastic amount of volume coming in and around settlement. A lot of traders who were long, likely off 91.50, right? Let's measure it up. If they were long from 91.50 as their average, we're right around the scalper's objective. It's actually a little bit above it. You can see that bump in volume was right around the scalper's objective. The next bump is forming just above that. So, I mean, we're right around a major objective point in the short term. But if they continue showing and demonstrating support above this, then a lot of buyers are going to be looking to pick that back up later on for a bounce. At the moment, 91.50 doesn't look like it's going to hit. Retesting back up into the 14,933s. Top weighted POC still, no new high. They barely have any candle gapping. I don't know if that's going to be enough to really do anything. A little bit. Target's at 99.25 for that. Well, it doesn't help a lot, but it's there. Looking on the bigger picture in terms of what's going on here, this deeper dip that is happening, we are taking place off of a larger L5 very nicely. And now they're re-upping off of the L4 and breaching into 3. We've got some pretty strong continuation. Now, the first objective for buyers, if they're going to be holding off of an L4, is usually going to be L2 to 1. Somewhere inside of here is their objective point. If it makes it through that, well, unfortunately, the next POC is right above that. We've got a lot of roadblocks for the bulls to work through. But this is a great start. Really, really strong bull bar. It would have been nice to get down to that 725, but $94.25. I'm going to offset a little ways down underneath that. I want to ensure that everything is in the right place, because if this does pull back more aggressively, then, you know, I don't want to be left holding the bag. Because if it is going to pull back a bit more aggressively, the next point of interest would be, well, to retest down here at the support zone. They did support out of there. They just never gave another opportunity. So this is kind of that midway point where bulls are going to be looking for potential scalps back to the upside off of the earlier settlement prices. That's also where the POC is, which is nice. Nice quick little snapback to retest this current forming POC, but this is too far up for me to really want to do anything with this right now. Oh, man. POC jumped up pretty aggressively now. Not really enough confirmation to do much of anything yet. Bulls are still trying. Probably going to need a little bit more of a pullback, but they're still trying. The last major pullback was in L3, which continued up. Usually L3s are going to hold L1s. It didn't. That's what I was trying to buy into last time. It held the L2. I wasn't anticipating that, so I exited accordingly. Once it rolled back up, it held the L1 and then continued back up from there. So now we've got the L1s kind of kicking off, which is usually where the trend begins. The next L1 pullback is just a bit lower down in the 25s. Doesn't have to go very far. But the last confirmed POC being down at the 900s. I mean, oh, now look at the POC on the S&P shifting up. Potentially suggesting that the traders who were long are starting to peace out. That also took away the reason for my support on the long. So I can't go long there anymore. That doesn't work. And here it sits. Still just chopping around the top of the wedge. We've got 5 minutes until 10 o'clock. The POC, although it did shift up, the market's closing above it. So here again, they're still demonstrating that they've got the power. Looking across, quick little flash dip on golds. Not really much else going on. S&P is holding that 1-to-1-to-1 ABC. Trying to shift back up. Big jerk in volume there. Jeez. Right off of the 21 EMA. Nice. Way to try to hide the algos there. I wonder what happened. Pretty good continuation to the upside. We do only have about 4 minutes until we go into 10 o'clock, so feel free to get those last questions in. Honestly, I'm not seeing any reason to go over any new risk or anything like that, so let's use this to go over the trades and everything for the week. What was the beginning of the week? 26th? Yeah. It's got to be a bit bigger. There we go. Okay. So this week was a lot of scalping, a lot of swing trading, a lot of back and forth, really. Dollars and cents aside, that doesn't matter. We're looking at the overall traders math here. I've had 70 trades this week, a few build-ins, that's for sure. 68.57%, average win-loss 0.61. So as far as the traders math is concerned, 68.57 minus 100 are the losses. The losses are 56 on average, and the wins are the rest, minus 1760.08. So as far as the traders math is concerned, it is a positive week. But we do know that this week had some difficulties. I had a relatively difficult break-even trade that worked its way all the way back up. And that's where the majority of the math is taking fault. But we can still see that the traders math is positive. Therefore, I know that I was doing my job. Right? Now, it may not have been a perfect week, but it's certainly still a good week. My norm is usually closer to 800. A little bit weaker. Weak. Add that pause in there for dramatic effect. But still in the positive. Still looking pretty strong. And maybe we can up that a little bit more as we go into the extended session. So pretty solid week. Heavy on the trade side, obviously, which a lot of that came from build-ins. Here it sits as we go into 10 o'clock. That is the next batch of news going into 10, although it's not necessarily expected to do a whole heap of much. It's there. And then maybe we can find some scalps in the extended session. We're starting to reach up to that 44.12, hey? Man, we're going to have to pay, that's right around the corner. More continuation to the upside, just kind of hovering at the moment. Definitely not making the job very easy, that's for sure. POC shifting on the S&P still up, candle still closing above. On the NASDAQ, we haven't seen the exits yet. Potentially some exits for the longs, assuming that that's what the longs are at 96.50. They haven't had full exits enough to shift the POC at least. Although, geez, you see spikes in volume like that bad boy right there, and that makes you kind of question that. How long are they? Very strong bear bar off the 21 on the S&P. The POC is still underneath. That seems like a really great spot to get trapped. But if shorts are going to be coming in at 97.75, realistically, I can't say that I believe them, but we are coming off of a 21. We've got the POC underneath. I would rather see a bit of a further dip. 98 into like the 97s. 96.75, somewhere inside there. I just like that a lot more. All right, well, I'm not seeing any of the questions coming in on the YouTube side of things, so we'll transition over into the extended session. For those of you who are ducking out for the rest of the day, I hope you had a fantastic trading week. I know it was a little bit choppier, sloppier, at least for me, but we still made it work in the end. We'll see if we can keep that ball rolling as we end up the week. But hopefully you had a great week. If you have any questions that I may have missed, feel free to drop those in the comments below, or shoot me a message on via email, jhb@ssftg.com. That'll do it. As we always say over the weekend, enjoy, rest up. We make more decisions over the course of a day than most people make in a week. So make sure to do something outside of the markets that allows you to rest a bit, so you come back on Monday ready to rock and roll, all right? Take care. We'll talk to y'all later. Enjoy. And for the rest of you, hang out for a little longer, and we'll see what we can make of it. Talk to y'all later. Thanks. Bye. All right. Drop that there. Drop that.